Hey, welcome to The Explainer. If you're in the crypto space, you've probably been looking at a sea of red to kick off August. So today, we're going to break down exactly what's going on with Bitcoin's sudden slump, what's behind it, and why the whole vibe has shifted from super bullish to, well, pretty cautious, almost overnight. It really is the big question on everyone's mind right now, isn't it? After such a solid run, what on earth is causing all this downward pressure? Let's get to the bottom of it. To really understand this whole shift, you have to look past the headlines. The entire story really hinges on one single number that traders and analysts have been watching like hawks. So first things first, let's get into the numbers. At the start of August, Bitcoin took a pretty significant hit, and it all revolves around one very specific price point. This is where the price ended up, just under $114,000. And look, this wasn't just a one-off bad day. It was really the culmination of a slide that started building up in late July.
And here's that immediate trend, a drop of almost a full percent in just 24 hours. Now, that might not sound like a total catastrophe on its own, but it's actually part of a much bigger and way more significant pattern.
Right? Because that small percentage drop, it's kind of hiding the real story here. This wasn't just some random dip. The price actually smashed through a key technical level, a real line in the sand for a lot of analysts. And that, right there, changed the entire conversation. And that number is $114,000. For weeks, this level was like a safety net. The price would dip, but it always seemed to bounce right back from here. So by finally breaking below it, a huge psychological barrier was just breached. Okay, so why now? What are the forces that actually push the price below that supercritical level? Well, it turns out it's not just one thing. It's more like a perfect storm of four different factors all hitting at the same time. So, a few things really collided here. First, just simple profit-taking. The price ran up, so big investors cashed in. Second, August is just historically a shaky month for Bitcoin, so a little seasonal weakness was kind of expected. And third, you've got all this uncertainty swirling around geopolitics and monetary policy. But the real wild card? That was the launch of a new Chinese AI model called DeepSeek. Now that might seem totally unrelated, but when a huge new piece of tech like this drops, it can make investors shift their money away from assets like crypto and into the new hot thing. And that creates selling pressure you just didn't see coming. And it's so important to remember that Bitcoin doesn't exist on its own little island. This downward pressure, it didn't just hit one coin. Nope, it sent ripples across the entire crypto world. You can really see that contagion effect in action. There's an old saying in the markets, right? When the leader sneezes, everyone else catches a cold. That is exactly what happened here, as all that negative feeling just spread to pretty much every major digital asset. And just look at the scale of these drops. While Bitcoin fell less than 1%, other major players like Ethereum were seeing losses anywhere from 2 to 6%. It just goes to show you, in these moments of fear, the selling pressure often gets way more intense the further you get from Bitcoin. So, that brings us to what's next. With everything we know, what are the experts looking out for? It really all boils down to a battle between two powerful and totally opposite forces. Honestly, the best way to picture the market right now is a giant game of tug-of-war. On one end of the rope, you have all that short-term fear we just talked about. And on the other end, you have this really stubborn, long-term faith in crypto's fundamentals. And both sides are pulling hard. This leaves analysts looking at two completely different scenarios. The bearish case says that if Bitcoin can't get back above that $114,000 mark, we could see this slide continue for the rest of the month. But the bullish case is just as convincing. It points to that steady stream of institutional money flowing into crypto ETFs. That cash creates a really powerful foundation of support, a safety net that could easily soak up this kind of selling. And so we're left with the ultimate question for the weeks ahead. Which side is going to win this tug-of-war for August? Will it be the short-term fears of a historically weak month that pull prices lower? Or will that long-term faith, backed by some serious institutional money, prove to be the stronger force? That's the story to watch. Thanks for joining this explainer.